In 1987, Black Monday turned rich men into poor men, but poor men into rich men. Why exactly is today an opportunity for a lot of people? Why exactly did it happen? I'm going to start breaking it down on my good old chalkboard here. My name is Andrew. I'm a data scientist here in Silicon Valley, and that is Professor Meatball. And the two of us, we're going to teach you. We're going to teach you, if you guys wouldn't mind slapping that like button really quick. Sorry for asking, but it is the most important part of getting this news out to everybody because we have Ortex data for AMC, GME, and whatever it is that you guys were looking into. Was it Bitcoin? Because Bitcoin plunging as a major crypto lender halts operations is huge on the news. And on the chopping block first, amid Black Monday trends on Twitter, we are looking at recession fears from everybody and their uncles. So comment out which guys, like you guys are. US stocks tumbled at the opening bell Monday as the economy continued to reel from lousy inflation report and Federal Reserve's plots rate hikes, sparking fears of a recession. The S&P 500 opened in a bear market, meaning it dropped 20% from its recent high. Bear markets are viewed as a telltale sign that investors' pessimism about the economy. The Dow Jones Industrial Average dropped nearly 600 points to start the week, and the Nasdaq fell to about 2% after the opening bell. Investors are responding to growing concerns that the Fed is behind the inflation curve and that the economy is entering a period of stagflation. And here is how it happened. So let's take a look at what exactly happened in around 2021. It had a lot to do with costs, the cost of goods, general goods like groceries and whatever you have to use to live, and wages, which all came into inflation. Essentially, when both of these arise, you have people getting paid more so they can purchase more, which means that cost of goods can go up because people can purchase more, supply and demand. And if that doesn't, and if it starts going out of control, it can cause inflation. Exactly why your dollar might be worth 20 cents less than 2 years ago. Okay, let's take a look. So the first thing that happened was that we saw the cost of goods slowly start to crawl. In fact, as this cost of goods starts to crawl, you might see that there would be naturally a decrease in buying. In fact, that is what happened during the pandemic that happened all across the country and all across the world. So the US Fed decided to keep interest rates low. And the lower that it kept it, it made it easier for money to flow, for people to purchase things on credit and maybe eventually keep that economy pumping. However, a healthier option, something that would have kept the inflation much lower, would have been steadily rising interest rates. Well, a lot of economists agree, but a lot of economists also say that interest rates wouldn't have changed anything. And Japan has had the same interest rates, 0% for a long, long time. America had a stint of it as well. So historically, it doesn't seem like the Fed could have done anything to stop. But if that did happen, if the economists that favor raising interest rates over time slowly were right, then we might have seen a decrease in the cost of goods and and wages would have a chance to catch up. But now, as wages are starting to rise as well, that means that both of these are devaluing that dollar. The dollar bill that might be under your mattress or in the stock market. Either way, it is making it harder and harder for people to be able to purchase the same exact goods. Cryptocurrencies continue their free fall and overseas markets took a downward turn. Japan's Nikkei closed down 3% and the yen fell to its lowest level in 20 years, prompting Tokyo to suggest it will step in to reverse the trend. China's zero COVID policies of recurring lockdowns have taken an economic toll, and in Europe, the stocks index slid to its lowest point since early 2021. Over on the crypto market, Bitcoin was trading roughly $23,400 Monday afternoon, down more than 16% in the past day. On Sunday, the cryptocurrency lending platform Celsius Network announced that it was pausing all withdrawals and transfers between accounts in order to honor overtime withdrawal obligations. Celsius, with roughly 1.7 million customers and more than $10 billion, Bitcoin and other cryptocurrencies were collapsing price Monday. And you guys are able to then read a little bit more into what's on my screen. But at the end of the day, understand that this is just one of the bank runs that could be coming. However, if this is an opportunity in wait, understand that when Black Monday happened in 1987, it took just a few days for savvy investors to start making their money back. In fact, it only took 2 years for the stock market to surpass itself. And this was back in the late 80s. Something that happened much more recently was in the 2008 financial crisis, where it took you know, a similar amount of time, but greatly surpassed the stock market's performance in just a few months to maybe a year or two. So at the end of the day, understand that this is how the markets are now, a facet of playing in them. Because at the end of the day, you should be investing as if you could lose that money. But if you're playing for the long run, you should understand that right now is a golden opportunity to start turning poor men into rich ones, because the market likely will be, maybe not right now, but in a recovery mode that then tracks high. In fact, this is roughly where I got into the market when the pandemic started having the pandemic affected the market very negatively. This is roughly when I started stepping in heavily into tech companies, and that was a great part of my six-figure portfolio that allowed me to be able to then take liquidity and invest in meme stocks. So it's some part of my meme stock journey to share with you guys right there. On my screen right here, we have AMC short interest at 22.44%. That's what Ortex is able to scrape from the market. That is open data that Ortex can actively participate and see. And for GME, similar, 22.36% or 14.17 short. We saw over hundreds of percent of cost to borrow average just a week ago. Now we're seeing more reasonable, it's still high, but still more reasonable numbers. Remember, the Volkswagen squeeze only took about 15% short of the free float, and it's still anyone's guess of where this data could be heading. But we did see a strong buy signal on this is Lux Algorithm with TradingView. So TradingView is the free platform. Lux Algorithm is the brains behind it, and it was able to give that strong buy signal of GME on the minute candle. So make sure that you guys have taken a look in the description down below for the Lux Algorithm. It's still 20% off with the code AndrewMoMoney, and I hope you guys have taken an opportunity to start thinking about why you invest, because understanding the math behind what goes into this kind of economic recession could be a lifesaver. But at the same time, understanding why it is that you invest, why it is that you have a stake in the game, and why it is that you guys are fighting for financial freedom with Professor Meatball over there and yours truly, that's something that we are asking every single time. So comment down below where you guys are from, what you guys are doing this for, and how exactly are you guys planning on buying a dip. Maybe not right now, but in the near future, because this is sincerely a strong chance that we're turning poor people into grillionaires in the near future. And then comes the margin calls. For a margin call analysis, we'll see you guys in the next video. Make sure that you guys have already hit that subscribe button and hit that join button next to it if you guys want to be able to be part of this final page of people who have joined the Moon Platoon, Space Legends, and the Grillionaires. I want to thank you guys all, and I want to see you guys in the money. Peace.